Yo, good morning, everyone, and welcome to the Morning Market Report. It is Friday, December 5th, and yeah, we got a little bit of a pullback here on Bitcoin. I'm still in my short, guys. Could not break the golden pocket. Getting rejected at the quantum reactor and the dynamic reactor. We talked about this all week long, and now here we go. So, downside we're seeing here. Shout out to everybody in the chat right now. We're also simulcasting on X, so if you're watching this over on X, welcome. We appreciate you being here. We do have data coming out right now. I want to jump in on that. Here, do the thing. Class in session, because we just got data that just dropped at the top of the hour here. So let's go ahead and jump in on that and get that chart up here. Here we go. Core PCE coming in, guys, 0.2, neutral. So price was already booked in there. Cooked in on that. This is what it came in at. Consensus and forecast 0.2 came in at 0.2. Keep in mind, this data is from September. This is 3-month-old data. I told you guys this yesterday. I don't know that it's going to have much of an impact, but look at personal income. Personal income slightly, came in neutral to what it was, but slightly higher than what the consensus was, equal with the forecast. Personal spending, we are seeing a slowdown on that. Why? Because a lot of people are losing jobs. We're going to talk about that this morning on how many people have been losing jobs lately. A whole list of the layoffs for the year compiled by Kobisi. We'll take a look at that in a minute. PCE price index month over month came in as expected, flat, neutral. We got PCE price index year over year came in slightly higher. So guess what? Came in as consensus and forecast. So it was, if it's in the headlines, it's in the price, right? But higher than what it was. So we are seeing a little bit of inflation from September being higher. Core PCE price index year over year. This means that it's excluding the price of food and energy, right? So just the core levels of it was at 2.9 though. That did come down. So that means that we're seeing this increase coming in from food and energy, kind of those things you need. I'm just saying. Michigan 5-year inflation expectation. They're expecting that our 5-year inflation, so inflation 5 years from now, expecting that is still going to be 3.2%, guys. Remember, the target is 2%. So not looking good there on that. Was better than what it was and better than what was expected, but still a high number. Michigan consumer expectations. This is their preliminary report coming in pretty high. Actually, this is decent. Michigan consumer expectations in the United States increased to 55 points from December, in December from 51 points in November. What does this mean? Get down here and find that. There you go. Index consumer expectation focuses on 3 areas: how consumers view prospects for their own financial situations, how they view prospects for the general economy over the near term, and their view for the economy over the long term. Looking a little bit better there. I think people are at the point that they're like, how much worse can it get? Hopefully not much. It could. It could actually. Michigan current conditions, they were expecting that this would be higher, 51.3 to 52, actually came in lower. So the current conditions, people think right now it is crap-tastic. That's what that means. And then the inflation expectations, it was at 4.5. They were expected 4.4 on the forecast, came in at 4.1. So this, what is the timeline on this year? You may be asking. The index of consumer expectations focuses on those 3 areas. Again, each month, the survey contains approximately 50 core questions, each of which tracks a different aspect of consumer attitude and expectations. The samples for the surveys on consumers are statistically designed to represent all American households, including those in Alaska and Hawaii. So right now, the general idea right now is that people think that the inflation right now might come down a little bit. So keep in mind, this is December, this is September, and that could change off of what the data they just got that's 3 months old. So, yeah, let's go check out the chat now. I just wanted to get into that. Let's go talk to the chat. I got in trouble yesterday from Dave Digital, so I now have to make sure I try to do a full hour show for you guys. So we're gonna go talk to the chat for a minute, see who all's in here. We got Loco. We got Alexander G, obviously, the mod queen. She's always here. Appreciate you, lady. JR is in here. Loco for Crypto is in here. You know what it is. JB Hulk Smash, what's up, man? Just give it a wave. Who else? Baba Yaz in the house. Let's go to the top. Let's go to the top, see who I missed up here. Mike Vollmer, appreciate you being here, man. Massive dump coming when the job numbers get released? No, I think it has to do with midterms. We're going to talk about it. We got a big breakdown for you guys today that we're going to talk about the midterm years going back to 1966 and then what that looks like for crypto. So we'll get into all that. Henderson, go. What's up? Good morning, Arby Piper. What's up? What's up, dude? How you doing, man? Brakoshi No Dinero is in the house with us. Appreciate you being here, man. Ninja Glock. Hi. Hi back to you. Hi. If you guys haven't said hi yet, say hi. So when I get to the bottom of this, I can see that you said hi. I can give you hi. We'll see what's going on. Looks like we got the Alex O Crypto gang, the Otter gang flowing in over here on us too. So shout out to Alex O Crypto and the OGs. Appreciate you guys being here. You like that Bitcoin Magneto Piper. That's it, JB Hulk Smash. Glad you guys like that thumbnail today. If you guys missed it, you guys should go check it out on X. It's my dynamic thumbnails. I have a good time doing those. If Eric Wallet is in here, he asked me a question the other day and he said, hey, that thumbnail, is that done on ChatGPT or Grok? That was Grok. I said ChatGPT. I was in the middle of doing stuff, but no, it was absolutely Grok that I use to make my dynamic thumbnails. So they work pretty well. Harp, what's up, man? How you doing? Giving all the love to Alexandra G because she deserves it. And then who else we got in here? DeFi Diva in here from the Otter Gang. Appreciate you being here. Robert Mulligan and Crypto Society Bitcoin. Salute to you guys. All right, guys. Let's go take a look at the Bitcoin chart. Let's see what's going on over there. And then I also want to take a look at this data. Again, this data that we're going to look at today. Let me go ahead and give you a preliminary view of it. It's going to be these two charts here. And one on the left is the midterm years, aka after elections, right? Which would be 2026 is the next one. And then we're going to talk about, that's the stock market since 1966. And then we're going to talk about the total year performances on midterm since Bitcoin's been around and what this can mean for 2026. As I said on the thumbnail and the title, if you think 2025 was bad, you might want to brace for 2026 just based on, over 50 years of history here and what that could look like. So look at the Bitcoin chart right now, though, guys. We are getting a pullback up here. Looks like the stock market is giving a little push here on that data, up about 0.5% on the NASDAQ. I'm looking over there to the side. But looking at Bitcoin here, we are coming back up into the quantum reactor. We haven't turned green on this quantum reactor. It's still gray, and it cut off the red. Do you guys know if we cut off the red, it could mean that we're going to go to the upside, right? Because when we called it back here, all the way back here on the 4 hour, we turned red back here on October 17th. I said, guys, this is a bad sign. If we come back up to this, we were all the way down here when I said it. If I said we come back up to this, we could get a rejection on it because it has now turned red, and that would be a downside move. What does that mean for Bitcoin now? It's turned gray, right? And so what we could see is that Bitcoin does hold here and we get a push up. Now we'd have to get through the 618, which was damn near impossible this week. But if we get back up through there and get this bounce off here, because we're pulling back up onto the dynamic reactor, I do think we could hit $100,000. That's going to be our 50 level fib. And we'll talk about some other levels that you guys need to be aware of up there here towards the end of the show. But make sure you guys stick around for that so that we can talk about those levels, because we got a whole battlefield here on the show that you guys need to know about. It's this one right here, the battlefield with our phase lines above us and below us. And we'll talk about where each of those are coming from in a bit. Let's go into the news and talk about the news right now then, and get in on that front, because we need to break down some stuff here before we get into the bigger time frame charting and stuff. Looking at the Into the Cryptoverse metrics right now, guys, currently the crypto market cap total sitting at $3.087 trillion. Trend line of this is at $4.77 trillion. Currently, crypto market undervalued by 35.28%. Let's go down and take a look at the risk bands. We're currently at a 42.5% risk band, making it a 3x DCA. And how about Bitcoin dominance? Someone said earlier it was dropping a little bit. It is, not much, about 1%. With stable coins, Bitcoin dominance is sitting at 58.7%, and sitting without stable coins, we're at 64.92 when you take them stables out. Let's go and take a look at the Fear and Greed Index. Fear and Greed right now, currently on stocks, sitting at 40. That it would be the S&P is green. It's doing okay. Nasdaq is green. Dow Jones is where we're getting that from, but sitting at 40 overall on the total here. Bitcoin and crypto, fear and greed. Bitcoin is at 28 right now total, combined between the Solana, Ethereum, and Bitcoin, all in the red right now. So for the stocks versus crypto, 40 for stocks, 28 on crypto right now as of December 5th. Just in, if you guys don't know about this, another Cloudflare outage led to numerous crypto exchanges and decentralized exchanges front ends going down. They are currently investigating it. I'm not sure if this came back up as of yet, but this was this morning, about 5 hours ago. I love this thing from Kyle Dukes. The internet held up by Cloudflare across the board, and that is a true statement. Let's go look at the liquidations in the past 24 hours. Currently, right now, past 24 hours, we had 117,000 traders get liquidated. Total liquidations coming in at $364 million in liquidations, largest single liquidation order happening on Hyperliquid. It was a fart coin trade. Holy cannoli. 5.41 million on fart coin. Imagine explaining that one to your wife. What happened to our life savings? Well, I traded fart coin, and I don't know what to tell you. What's up, Crypto Chef? Appreciate you being here. Buck Buchanan is in the house with us too. Appreciate you. Always good to see you here, Buck. Who else we got in here? Crypto Chef, man. Good to see you, bro. Good old Crypto Chef. DJ Mac Ollie. Top of the morning to you, sir. Top of the morning. Happy birthday week, LBC. Is it LBC's birthday this week? I think it is. That's awesome. Happy birthday to you, LBC. How old are you going to be? 20, 25, 26? You're a young man. Young man, you still got a long life ahead of you that you have to deal with, the U.S. economy. If that doesn't make you feel great, I don't know what would. Let's go talk about the stock market right now, guys. NASDAQ now currently up. Wow. Did you guys see these Beeple robots? They're all like, they're just automated robots, and they have like Jeff Bezos' head, Elon Musk's head. It fetched $1 million. Hey, the stuff people buy, like Fartcoin. Dow Jones is up about 0.5%. S&P is up about 0.5%. And then NASDAQ up about 0.6%. Russell 2K, though, down a little bit. Risk market, that's a high risk level of stocks there. And so, yeah, it's down about 0.2%. The volatility index, though, kind of flat today. Not a lot of volatility on that front. 10-year treasury yield now up to 4.118. That means it is being sold off. If it turns green, it's being sold off. And they are absolutely just not wanting to hold the 10-year yield. Now, in fact, we get rate cuts, and what happens? We get higher yield. What's oil looking like right now? Back above $60. Oil is on its way back up. We have been below 60 here for a couple of weeks, and this morning we are getting back above $60 per barrel. Looking at gold, it's back to $4,270 and is in the green, up 0.6 today. Silver making its way back to $59, up 2.62%, and copper continuing to crush it. Guys, copper is one of the ones we're watching on our data center stock list over in our Discord. So if you're over there in the Discord, go over to the TradFi watch list and take a look at it over there. It's pinned in the comments, so you'll be able to get that over there in our Discord. Copper right now up 1.4%. Platinum up 0.2% to $1,664. And palladium at $1,509, up 1.72%. If you guys remember the story time with Army Piper the other day, I told you guys about my ex. Sadly, one of the things that I was wanting to buy when I was on that 15-month deployment, for those that don't know, because there's a lot of people here, when I was on that 15-month deployment and I got a $30,000 tax-free bonus, the way that I figured out that I was missing a bunch of the money that I had made was because I wanted to buy palladium. It was under $200 at the time. And I wanted to buy palladium with some of my $30,000. And yeah, it's sitting today at $1,511. Horrible, horrible, horrible. How are we looking on crypto bubbles right now? Turning it around on the hourly, getting a little green. But on the daily, definitely seeing a lot of red on there. Let's take a look here at the breakdown on daily and hourly. Bitcoin down 1.4% on the daily right now. Ethereum down 0.9%. XRP's down 2%. Big movers. Solana's down 4.8%. We've got Dogecoin down 3.5, Cardano's down 3.2, Chainlink down 2.1, Hyperliquid, man, down 7.8% right now. But Zcash, Dude, Zcash up 10% almost on the daily again. This thing will not die. Um, Avalanche is down 6.6%, and that's taking us out of the top 20. So there's how the markets are looking. Seeing a little bit of rebound on the hourly, but still sitting red on the daily overall. We just went over all this economic data here. Guys, next week we're going to get the big stuff. Monday, December 8th, is going to start off the week with some consumer inflation expectations expected to be slightly down. You can see that there, but still far away from that 2%. We're also going to get JOLTS job openings on Tuesday. So that's going to give us some employment numbers, our weekly ADP update, and then JOLTS job numbers. And then on Wednesday, we're going to get employment cost numbers. We're going to get some some mortgage updates. But the big one, it's going to be our FOMC rate decision, expected to be going down by 0.25%. And then, of course, Jerome Powell is going to start speaking, and we'll see what he does to us. That could be a nasty looking thing there. I do believe we're also getting some non-farm payrolls at some point. Maybe. I don't know, man. Non-farm payrolls. I'm not seeing it on here anywhere. When are we going to get that? Oh, yeah, it's coming after. We get it after the meeting. That's right. Non-farm payroll is going to be on Tuesday, December 16th, after the FOMC meeting. We'll see. How is it looking right now? Non-farm payrolls for October that was rolled into November, and we're going to get November's in December. So there we go. Expected right now, no expectations. It's just giving us the previous. They haven't even ran numbers on this. So we'll have to keep an eye on that and see what the unemployment rate comes in at. Flashbang for you guys. Get ready. I got to bring this up here. Let's see what the chances are of a rate cut December 10th next week. 87.2% chance as of right now that we get a 25 basis point rate cut. We'll talk about this in a bit, and I do want to pull this article up. We'll talk about this. Found it kind of interesting. Is Bitcoin really digital gold? I don't know that. I don't personally think that the narrative has been met this year for 2025 for the Bitcoin digital gold narrative. I really don't. I said a long time ago that it would have to prove that it is that hedge play, that digital gold play, and it's missed its opportunity completely in 2025. I think it has proved exactly what I've always said. At the end of the day, Bitcoin is a risk asset, and it's in the higher tier risk levels in comparison to the stock market, and it has played exactly as that, a risk asset this year. So Bitcoin's digital gold argument is being tested as it and other cryptocurrencies continue to trade like risk assets. There you go. Didn't even read this and said that. During stock market sell-offs, let's go down here and see what they're saying. Bitcoin short pullback from its recent high wiped out its year-to-date gains, and that's led to questions about aggressive price targets for the cryptocurrency into 2026. But as important as where Bitcoin's price goes next is a question about the role that Bitcoin really serves in a portfolio. I think right now it's right up there with things like tech stocks in the AI bubble. I think it's a high risk asset still, not as high risk as other cryptos, obviously, but still there. More recently, as weakness in technology stocks led the market down, most cryptocurrencies, including Bitcoin, also sold off. Bitcoin in particular sold off considerably more than the stock market. It's typically double. If you guys don't know, let's come back over here and check out the chat. It's typically double of what the stock market does. When it sells off. So if the stock market has like, say, a 10% sell off, you'll see a 20%. You'll see a 20% sell off in crypto easily, or in Bitcoin even. Then you get even more with the altcoins. So, Shep, what's up, man? How you doing? Appreciate you being here. Let's go back to chat cam. There we go. Who else we got in here? Melissa One Love. What's up, lady? How you doing? Good to see you here. Crunk619, Al Jr. joining us here. Kappa Stappa. So glad I sold everything last night. Mike Vollmer, you're supposed to sell everything in October when we did. We put it out here, man. I told you I'm out. But I did say if we get a rebound, if you hadn't gotten out yet and you get a rebound, a little relief rally, you might want to consider that as a opportunity knocking at your door. Trump passed a law that new data centers can be built on federal land now. Yeah, I don't think that's going to do much for them. I mean, they're not really paying much when they're building these anyways. The Meta's data center that they're putting in El Paso, they got the land for dirt cheap, and they don't even have to pay property tax for like 5.5 years. Yeah, so they got a lot more than what they're giving back to the community down there in El Paso, man. So that doesn't surprise me. Oh my God, that dude makes so much money. Who are you talking about, Melissa? Not sure. Oh, Trader Zach. Let's print some paper. Ski, maybe. I don't know. Trader Zach, what's up? How you doing, man? All right, let's go jump in and let's get in on the well, yep, I'm a little bit late selling. It's okay, man. It's okay. Let's go. All set. What's up, bro? How you doing? Let's go get in on this topic here that I wanted to break down for you guys because I think you guys need to be aware of this. So this on the left, again, this is your 1966 to current levels of midterms. And if you guys don't know, let's go over to here. Let's bring this in like we left something. Go into here. There we go. And I want to show you guys this first of all. We're going into 2026 with these layoffs, okay? Recent layoff announcements. U.S. government, 307,000 employees. UPS, 48,000 employees. Amazon, up to 30,000 employees. Intel, 24,000. Nestle, 16,000. Verizon, 15,000. Accenture, 11,000. Ford, 11,000. Novo Nordisk, 9,000. Microsoft had 7,000 employees. PwC is 5,600. Salesforce is 4,000. IBM, 2,700. American Airlines, 2,700 employees. Paramount, 2,000 employees. Target, 1,800. General Motors, 1,500. Applied Materials, 1,444. Shout out to CZ. And Kroger, 1,000 employees. Meta, 600. Where will all of these people go? They're picking up multiple jobs. So when we see these job numbers that look, there's a lot more jobs being picked up out there. They're part-time gig work, man. These people that are leaving these good paying jobs are getting stuck in 2 to 3 jobs to make a run and make some money on it. So but there's the other one down here that I wanted to show you, and it's this one right here. Digital Asset News. Shout out to Rob. He showed this poly market. Democrats surge in midterm odds. 80% chance that Democrats take the House in this midterm, and that's going to be November 2026. Okay, and he said November 2026 will be a midterm election, and Republicans will lose the House, possibly the Senate. The markets won't like that because they don't like unknowns in policy, and market will tank as the data gets closer. Bitcoin better run up before I don't make the rules. And I agree. So I did some more research. Eric Wallen sent me this one here where we talk about from 1966 on the stock markets during midterms, 22.2% downside, 36.1, 48, so on and so forth. I got a full breakdown on this data. And then also we're going to take a look at this data over here on the what has happened in 2022, 2018, 2014. What can we expect for 2026? And this is on Bitcoin itself. So let's go in and take a look here and get in on this data. Let me move you over just a little bit, sir. Just a little bit, just a little right there. Perfect. There we go. Now let's go talk about this. So stock market midterms, guys, going through this data, 22.2% again. 2026 so far, it's down 11.2, but we're not going to count that. We're just going to keep moving on with the averages for the year. So the big picture stats, average midterm drawdown, max drawdown is about 22.3%. That's your average max side on stock market. The median on this is about 19.8%, which is about 20% total. Distribution, 40% of the midterms had a drawdown of at or greater than 20%, or less than, or at or less than 20%. 20% of the midterms had a drawdown at or less than 30%. And then approximately 13% of the midterms were in crash territory, meaning greater than 40%, right? So Bitcoin in midterm years, taking a look at this, and you can see that's going to be your 2022 here. It's going to be your 2018 here, where you had one quarter in there that was green. 2014, you had another quarter that was green. But how did these turn out overall? Looking at 2014, 2018, 2022, what does that mean? For full year, average midterm Bitcoin pullback, 64%. Median average on this being 64%. So it's not just one outlier. They were all brutal, seeing that pullback there on that. Average of the 3 midterms, quarter one, about 29.5% downside. Quarter two is seeing an average of 7.8%. Quarter three, 2026 could see an average somewhere in 12.9%, and then quarter four at 24.5% downside. So out of 12 quarters of midterm cycles, we've only seen 2 that were green quarters. Okay, so keep all that in mind. So typical shape, quarter one, we get a big flush out. Quarter two, it's either a relief rally or a continuation nuke. You've heard a lot of people talk about March, we return back to the markets. Do we see what I just said here, a quarter two relief rally coming in to the spring of 2026? And all that does is gives everyone, another chance to get out. Got a little burp there from the coffee. I'm sorry. So what do? We drink more coffee. That's it. So how are we looking for quarter three? Choppy, small moves. Sentiment is dead. Okay, not a lot of volatility. In the quarter four, we typically get another leg lower, capitulation risk. And you can see that here, 2022, 14.75% down. 2018, 42.616% down. And then 2014, right there above my head, 16.7%. So, what does that look like for 2026? So if we look at 2026 overall, let's get in here and talk about this. If you look back 60 years, US midterm years are where risk assets go to rehab. The stock market averages about a 22% maximum drawdown from the highs. 2 out of the 5 midterms cut 20% or more. So every 5, we get at least 2 that hit 20% or more of a downside on the stock market. And again, remember, keep in mind as I'm reading these numbers on the stocks, Bitcoin typically is double that. And so every so often you get a full-blown 30 to 50% crash in the stock market. So 2026 right now is only about 11% off the top. That's not nothing, but in historical midterms terms, we are only halfway through a typical detox if this plays out like most cycles. The 2026 detox coming soon to a chart near you. Bitcoin midterms are a hangover year. So now take that same midterm lens that we just talked about, right, and apply it to Bitcoin. Look at 2014, 2018, 2022. All midterm years, all 2 years have after a halving. So it occurs 2 years after the halving. 2014 was a 56% downside. 2018 was a 72% downside. And 2022 was a 64% downside. The average midterm Bitcoin year is down about 64%. That's your average for midterm cycle for Bitcoin. We've now marked a top currently at 126,217, and we're roughly high 20% off from that high. We're about 28, 26%, something like that from that all-time high. If history rhymes, midterms are where Bitcoin spends the year carving out that 50 to 70% drawdown zone. And we'll take a look at that on the chart here in a minute, so stay tuned for that. But that doesn't mean that it's a straight down line. It means a full year of ugly rallies and nasty sell-offs, getting everyone hopium in and then washing them back out, being exit liquidity for someone else. So the shape of a typical Bitcoin midterm year and what we could see, looking at quarter one for 2026, guys, could be looking, and we'll just pull it up here so you can see 2025, but quarter one, historically in midterm years, is where we see something like a 30% flush out. That's the real, oh crap, maybe that top what did happen, right? Maybe the top was in October. Quarter two, we go into that, and it's the chaos quarter. Sometimes you get a monster relief rally like in 2014. Other times you get another leg down like 2018 or 2022. And that's not where I marry direction. That's where I trade the battlefield, okay, guys? We're going to be talking about that one heavily in 2026. Quarter three, we get average downs again, but smaller. It's usually the apathy quarter. Volume dies, engagement tanks, the Bitcoin is dead articles come back, and Piper Academy's viewership numbers drop because no one even comes to watch YouTube. It gets really bad at that window. So if you guys are here in quarter three, 2026, I'll know that you're diehard for the cycle return. Quarter four has historically been the capitulation final washout zone. Average around 25% downside on that quarter for midterms, and that usually is where the long-term entries feel the worst, but age the best. That's what we're going to be buying, period. That's where we are going to be buying around that window of the quarter four 2026, because I've got a chart that I'll show you too, how that's played out for us every cycle after tops on the following year. So the Piper playbook, how you position this, here you go. You can close, you can do, look at this. For me, midterms are not about guessing the exact bottom. We can have a window for it. We can estimate what that amount is going to be, but we're not going to guess. We're going to dollar cost average into that bad boy using the Piper plan. We're going to be looking at the MVP oscillator and grabbing that bottom side there on that indication every month. That's going to give us a green candle. I'll show you that in a second too, and we'll break that down for you. But my focus isn't getting FOMO on every bounce. It's managing risk during the midterm chop. It's using deep pullbacks to upgrade my portfolio with a dynamic dollar cost averaging, and then treating 2026 not as the end of the story, but as a accumulation chapter for our cycle run next cycle. And that's how we're going to approach this, guys. Diamond brains all day long. This is why we study history. I hear people all the time talking about, just because it happened doesn't mean it has to happen again. This is why I study history. In my world, in my analysis training brain that I did for 22 years in the Army, the one thing that we watch all the time is what has happened, what is the norm, how can this has the variables changed? As of right now, no variables have changed. We've even seen Marathon, who was a big institutional buyer, sell off. We talked about news this week that Michael Saylor's strategy may have to sell some Bitcoin, especially in January if the MSCI decides that MicroStrategy is a Bitcoin fund and can't be listed on indices and stuff. So that narrative doesn't carry us through. Okay. So we're just going to continue monitoring the midterm detox cycle, and we're going to be picking up where we need to and being smart with this. History doesn't always rhyme. Doesn't always repeat, but it definitely rhymes. And so that's what I wanted to break down there for you guys. I think everyone needed to be aware. Bitcoin, beautifully, ingeniously designed on election years for halving and on midterms for the end of the cycle. It's just crazy how it plays out, but it is what it is. So Alex is a legend, taught me heroes. Alex is a legend, dude. Alex O Crypto is the man, dude. Let's see how all we got here. You guys are just talking it up. I appreciate you guys all being here. 139 people on YouTube right now. We got 153 total. Some people over on X watching us right now too. So appreciate you guys all being here. If you're in X, go down there, click the video. It'll drop live chat at the bottom. Click that and send us a message. Not even sure how it looks here on my setup. So let's go talk about this chart though. Let's talk about why I'm thinking that October 2026 is our window to watch for the end. And then also how we're going to identify the bottoms and how low we can go. Let's talk about that. So looking here, guys, at the timeline chart, and I'll bring this over a little bit here. There we go. Let's take a look at this timeline chart and look at the previous cycles. It's the math is beautiful on it. From the bottom of the cycle to the halving is a mirror from the halving to the top. Almost dead on. Dead eye right there, guys. 371 days from bottom to the halving, 371 days from the halving to the top puts us damn near at the top. Okay. Actually, it does on this one. 413 days in between is the top to the bottom. Keep that in mind. Next cycle, bottom to the halving, 539 days. Halving to the top, 539 days. There's your mirror again. It just plays out over and over and over again. And then we have 364 days from the top to the bottom. Going again, bottom to the halving, 518 days, 518 days from the halving to the top. We're off by about 2 weeks here. It is what it is, but it's still in the ballpark, guys. It's not exact, doesn't repeat, but it definitely freaking rhymes, okay? 378 days here in between from the top to the bottom. We go into another bottom, run into the halving, 518 days. 518 days after that halving, what do? We're damn near the top again. And that was where we were on the top side here when we hit it on October the 6th. Just so you know, we talked about this level in detail. We also talked about this being the price target for the high, which was the golden pocket of the cycle. And we did this when we were back in here, back in 2024. Hey, watch this level up here for being our top zone. Why? Because it doesn't always repeat or rhyme, but it doesn't always repeat, but it always rhymes. Golden pocket top, golden pocket near the top, golden pocket top. So It's just a continuous mathematical repeat equation, guys. And I don't know why people try to complicate this and make it all difficult and throw in this hopium and that article and this what if. Until it proves us wrong, we have to look at what we're seeing on other cycles. And has anything changed this cycle to change that narrative? No, we pretty much hit the top there in the timeline. We hit the top there in the price level. Okay. And now we're heading into 2026. If we look at this on an average of top to bottoms in the cycles, okay, it comes out to around 364 days. That would be October 5th, 2026. If we look here and go bottoms to bottoms, looking at this from a whole different perspective, bottom to bottom, and then bottom to bottom, guys, 1,428 days, 1,442 days, 1,435 days would be in between the 1428, 1442, 1435. What does that put us at? Oh, October 26th. So you got about a 20-day window there that could very easily be the bottom of the market timeline-wise. What about price level? What are we looking at for that? Let's turn off the battlefield and let's go take a look at this here. There we go. Bottoms, market bottoms. We typically have had a downside move every cycle into the platinum pocket. This is pulled from cycle lows to cycle highs for retracements. Platinum pocket there at the bottom back in 2015. Do it again, top to bottom, pullback, retracement, platinum pocket, 786 to the 887. That happened right there back in 2019. Again, back in beautiful 2022, downside just breaking below that 786. If we do that again, break the 786, we're looking at $39,000 Bitcoin. You want to change a narrative? Okay, we don't get as deep of a pullback because they haven't been as bad as what they were. Look, this one came deep into the platinum pocket, almost to the 887. This one came about 50% through to the platinum pocket, hitting there like about 50% between the 786 and 887. This one barely hit it. So let's say this one hits just above, be it 40,000, or it hits the golden pocket on the retracement. You're talking $52,000 to $57,000, which would make sense because we started into the cycle so soon, ending, in October versus November or December. So we are seeing that this downside move here has already begun early in 2025. I could see us coming down to the 50% line here and then getting a bounce up relief rally in March time period or April, getting another rejection off of this top side golden pocket and then sending us into the golden pocket there, looking at about $50,000 on the downside. Now, something I will point out, that would have us breaking previous cycle highs, but we did that on this cycle also, came down lower than the previous cycle high, and people said, we should not do that. That'll never happen. Guys, anything can happen. Quit saying never. So will we come back down and break this $68,000, $69,000 level from 2021 high? It's possible, but even if we only come down to the 50 and then chop a lot there, get a couple of wicks up and back and down, it still doesn't change our plan. We're going to dollar cost average our way through all of this. My ticker is not up there. There we go. Fixed it. So that's what we're watching there for price wise. You got in October. So we're watching a range of a worst case scenario, $40,000. We're talking about $50,000 to $57,000 for a base case, and our best case, we're looking at $70,000. Now, let's talk about what we saw on the pullbacks for previous cycles on Bitcoin, and let's talk about that because the average for the stock market, again, I'm pulling up my data over here. Average for the stock market pullback is around, I think it said 20%. Average midterm, 22%. That would be a 44% pullback for Bitcoin to a 50% pullback. Guys, look at that. 50% pullback from there is going to be right near the golden pocket. So again, I'm thinking that base case, we're looking at like a $50,000, low $50,000 range in October. How do we catch that, and how do we know when that level is in? Well, first off, we're dollar cost averaging every week. No problem, no harm, no foul there. But let's go over here and take a look at this, and we'll turn off volume here, and we're going to pull up the MVP oscillator. I'm going to show you guys the power of Chart Prime. because there's something here that I use every single cycle. It's what allowed me to buy my Bitcoin at $21,420 average this last cycle. It's why I did so well, and sold at $126,000. So did pretty decent on the pickup and on the sell-off moment. But let's go put this on the MVP oscillator on the monthly, and we'll just talk about this because this is what we're going to be watching come October, maybe even before, because it happens a little bit before. You can see here, we'll go back into this cycle. There we go. Looking at 2015, we do have this bright green candle. So we get some warnings here. The candles start to get brighter and brighter, right? And so we're like, okay, cool, let's get this. This thing is ready to be picked up, right? And we're watching it. Oh, come back, baby, come back. There you go. We're watching this on the monthly here, and we get these warning candles. So on the first one that prints a bright green candle like this, we do 10% in of our total dry powder, and then 10%, 10%. And we continue that on until there's no more green candles. That gives us an average right in here somewhere for that whole run up. Go back to the next cycle here. Back in 2018, what do? We got two of them. So we're 20% in there. We do the last 80% in there, and we were in there for that whole run up again. Last cycle, the cycle that I had this indicator for, we had 9 months of 10% in each month, okay? That gave us an average of about $21,420 on the last month. We did our last 10% because there's no more green candles, and we ride that bad boy up. That's what I'm going to be watching, and I think that this is going to be taking place in October. Okay, so great. We got a target idea for price on the bottom side. We have an idea for when we could see that bottom side. What can we take off of historical data and give us the setup for what we could see in the top side movement of the next cycle? You gave us how to get into the bottom. You gave us when the bottom could be, Piper. Where are we going to hold it to? Guys, if we go and we do the same way that we've done these logarithmic Bitcoin golden pockets on Bitcoin on here, right? Let's take a look at what it would be if our current top is in, and if our bottom pullback here is in line with the 786. You're looking at about a $354,000 to $411,000 Bitcoin. What if it only hits into the golden pocket? Guys, you're looking at a $500,000 Bitcoin, very likely. Even if it came in and hit just under that 618, like we did here back in 2021, you're looking at about a $500,000 Bitcoin. So if we know right now when the bottom could be, if we know right now likely where the bottom will be on price, and we have the indicators for it, then I think that we do have a really good cycle running up, and that's why we're going to be doing the Piper plan. Dollar cost averaging, they're dynamic. It's not the same amount, guys. We don't go, all right, I got $25 a week, so every week I buy $25 worth. We're looking at risk bands, and we're putting that out every Monday in our Discord. You take that money, you go, okay, $25, we're at a wristband times 3, so it's $75 a week, and we buy heavier as the price springs down so we can catch it on the upside and get that move. Hashtag 420. Shout out to Alex O. Crypto. I see you there, bro. But guys, that's what we're going to be watching, and that's how we're going to approach this cycle. That's how we're going to get into the best price that we can get on our Bitcoin, and we're going to hold it again until the next golden pocket line. Of course, once we confirm a bottom and start getting all those indications in 2026, then we can run for that target in 2029. But 2026, guys, sadly, as the thumbnail said, here's the thumbnail again. Pain is coming, guys. You thought 2025 was bad. I think 2026 is going to be worse. It's just historically we've done it. Especially if we're looking at getting rate cuts and the job numbers are still horrible. Guys, all those job numbers going away. Those are people losing jobs. Those are people that don't have as much income. Those are people working more hours to make less money, and then they're turning around and getting hey, I don't even have enough money to buy stuff, let alone invest. Trying to buy groceries here, not Bitcoin. That's I think that's where we're heading, especially if we get these rate cuts. Anytime we cut into rates, it's not a good move for us. My dog's here saying hi to me. Hi, Gypsy girl. But yeah, that's what I'm watching, guys. Army Piper with the helmet. That's right. It's what I'm watching right now, though, for 2026. I'm watching those levels, that timeline, and we'll just keep updating you guys right here every single week on the or every single day. I mean, on the Piper Academy channel. Appreciate you guys all being here. We're about to head out of here and then go enjoy Friday. It's the weekend, so this weekend, be safe. Remember, I want to show you guys. Don't forget this. I got to show you. Got to show you. Best days to DCA, they're coming up according to Into the Cryptoverse metrics. Let's go here and do best days to DCA. Best day to DCA. There we go. Best days to DCA, and we're going to run this for 2025 because I don't want all the other data. We're going to isolate this data for just this year. And we're going to put it for January 1st to current. There we go. Your best days to DCA. Saturday, number 1. Number 2 is Friday. Number 3 is Tuesday. So today or tomorrow, according to legend, best days to dollar cost average. So let me see if I can get her. Gypsy, come, place. Good girl. Come here. There you go. There you go. There's some Gypsy for you. Say hi, Gypsy girl. Gypsy. Look, hi. All right, guys. If the puppy makes you guys happy, make sure you smash the like button. Appreciate you guys here. I'm about to go spend some time with my dog. Enjoy the weekend. Enjoy the grass and the weather, and get out of the house with the family. So, you guys have a great one. Remember, trade safe. Use some risk management. We'll catch you guys back here next Monday morning with the news, the charts, the markets, the headlines, and everything you need to have knowledge, because knowledge is profit. Until next time, guys, trade safe. Peace, love, and profits. We're out of here.
That's the rap. Chart stack, data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional, damn it.
We'll see you at the next
They
one.
don't know what the fuck they're doing.
Morning market report out, 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 out.
Boom shakalaka.
We'll see you at the next one. Morning market report out. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?